30 seconds. All right, let's get started. Okay, I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. And here is my position disclosure. Feeling pretty light, feeling pretty tight. Tried to short Apple today at one point, lost a small amount of money. The real spot to, I guess, short was the last 15 minutes yesterday. Today was definitely tougher, but some of the stocks out there are still really weak. So I guess we could talk about that. This is a weird market, and in some regards, starting to get a little bit frustrating. It's been a frustrating summer, to be honest. Let's just be fair about it. A lot of people have been frustrated for this entire year. I've disagreed with that. I don't think that 2021 as a whole has been a difficult year. I do think that July and August have been tough. And it's kind of this conundrum that we keep talking about, you know, SPYs and Qs are just so strong. I mean, even today, I can't believe that the S&P closed positive today. It's really impressive with the degree of that gap down on, you know, like I was saying in the morning meeting, it's the first morning after the first down day, and we gapped down huge. I'm not surprised that we saw a bounce. I probably shouldn't even be surprised that we're green, but it's just impressive that we're green. And you know, Qs as well. You know, so how did we close in these indices? S&P is up 0.25%, no big deal, nothing happened today. And Qs are up 0.6%, which is just the normal monster strength. But in a lot of ways, I just feel like this Russell has just been more representative of the market as a whole recently. And the IWM here is down over a percentage point. There are a lot of stocks out there that are basically just in bear markets. And that's just what's been the conundrum of this market environment. It's just been that real few stocks that are holding up really well. I mean, look at this, Microsoft. I think everyone knows that Microsoft is my favorite stock in the market because it's been that for years. But Microsoft closed up over 2 percentage points today. I know it had a little bit of positive news at one point around noon, I think, about what are they doing? They're increasing their pricing on Microsoft Office. Is that what they're doing? Subscription pricing? Right. But all the same, look at that Microsoft chart. That dip got bought into the 21 EMA. The pattern of higher highs and higher lows continues. And we got these mega cap stocks that are able to be green today. It just makes it difficult for the market to do much else, you know, for the S&P. Russell's going to be a little bit different because this seems to be more of the real market. And even the Russell here is just down 20 bucks from highs, as opposed to there's a lot of stocks out there that are just down massive. I mean, even some of the ones that I trade pretty consistently that I have positions in, you know, this INSG, it's pulled back from $11 to $8 over the course of a month and a half or so. That Coursera, they totally sold off that earnings report. It's all the way back down to this $35 general support area. That's been pretty tough. That Sumo, they brought back down from, you know, 23 and change down to 19. So those are just really big percentage down moves. They tried to wreck like CLF today. Well, I guess they did. CLF closed down 7.5%. CLF is my favorite material name. We've talked about that a lot here. The last earnings report into that $20 area was impressive, but pulled back, you know, very heavy today. 7.5% down day. It's circuit broken. It was down over 10% at one point today. That's a lot for this type of stock, even though it was able to rally here a little bit midday. Caught a nice little CNBC mention. Someone came out and defended it a little bit to, you know, catch a bid on it. But I'm still a big fan of CLF. Today was tricky. So a couple names that we focused on from a day trading perspective. Macy's, No, Felipe was all over this. Great job. We spoke about this in the morning meeting. The earnings report on this Macy's was incredibly good. Incredibly good. They gapped it up pretty big. We know $20 is a really big daily level, right? 20 bucks on a closing basis is a really big daily level. They gapped it up really big. They sold that first bar off, but that's not unusual. You know, for people who were involved in Tilray yesterday, where I lost a little bit of money in Tilray, I remember a couple of people being concerned that like that opening candle was like a red bar. But what I was looking for Tilray to do yesterday was exactly what Macy's did today, which is, okay, fine, they sold off that first bar, but the gap was so big. So this ADMA is catching up, price action comes down, then it catches this bid and it goes. And Felipe, I'm pretty sure, was buying this the whole way up. So that was a really good one that we spoke about in the morning meeting. I know a lot of us focused on Baba off the open, off 165. That was a big focus for me. I had a pretty good price around 165 half or so. So all I needed was a move to 166 to be able to cover my risk. We got an even bigger move than that. We got to move up to 167. So I took off some extra stock. I was heavy in this. Excuse me. I'm gonna just get a sip of water here real quick. I was pretty heavy in this Alibaba off that 165 for 50 cents risk or so. Got the risk covered at 166. Took more off into this ADMA. The high here is 167.26. I was actually offered a little bit above that, but I saw it had just corrected into the ADMA. There could be a little bit of a struggle for it. So I brought my offer down. But honestly, at this point, when it was trading up into this ADMA, I thought that this thing was going to work its way higher. The downside extension of this Alibaba is sick. ADMA here is at about 180 or so, a little under 180, with the stock being at 160. This stock is below its coronavirus low here, which was 170 bucks. Yeah, I mean, they just took this thing to the absolute woodshed. So, long off 165 off the open, was able to more than cover my risk. I really wanted to see how this thing would handle 170. Obviously didn't get anywhere close to 170. But 170 is kind of a support level that it broke down from. So I wanted to see, when Alibaba gets up to 170, that part of my game plan was to take some additional profit there. The trade failed, but this is why we have game planning and risk management. If you were long Alibaba, and someone in the VTF said that they were long Alibaba off that 165 and lost money, if you were long Alibaba off 165 and you lost money, it's either because you've got bad game planning or bad execution, or you're just absurdly greedy. Your price, there's no way your price should have been worse than 165.75 on this, and honestly probably should have been better than that. It gave so many tests. That was one of the things that was making me nervous. It gave so many tests of that 165 that, I mean, your price could have easily been 165.20 in this thing. Again, mine was around 165 half. If your price was worse than 165.75, you probably didn't really belong in it in the same way. But even at a price of 165.75, it went up more than enough for you to be able to get your risk covered on the trade. So when it's failing, there should be no possible way that you could lose money in this thing. And that was it. I had my stock, I caught a bid in it, it went up, I covered my risk, then I booked a little bit more to make sure it was going to be a winning trade no matter what. It came down, it broke 165, I got stopped out at 165, trade was a failure, it ended up as a small winner, and then I kept watching it, but I never traded it again for the rest of the day. The only trade that I would have had some interest in was possibly like this buyback through 160 or so here, but it's not a trade that I took because I was off the desk actually at that time. Otherwise, I would have had some interest in that. And honestly, I wouldn't have held it overnight anyway. I don't think it just didn't close well enough. Even if I had that buy it back at 160, despite the insane degree of extension. The thing that we know about markets, especially on the downside, though it works both ways, is an extended market can always become more extended. So I'm looking at this thing and I'm like, oh my God, it's ridiculously extended on the daily chart. Extended by $20 in a $160 stock off of its ADMA. That's pretty big on a percentage basis. I always think that anything more than 10% in terms of extension from an ADMA on a daily chart is really big extension. but it still closed on lows. We still saw a ton of bearish option flow, which could have just been hedging, hit this thing at the end of the day, and that's it. You know, so again, it goes back to game planning and risk management, not bag holding on your trades like this. So that was Alibaba. I tried to be short Apple today, which is also a trade that I lost a little bit of money on. We're being patient on it. We were looking at this 145.50 as kind of being a key inflection area, because that would have been the breakdown of the bullish wedge that this thing built out. It broke up, but it's below all these key higher volume days. You got a lot of people out of the money on it. But this is hard money. You know, this is just it. Being short Apple is like the most difficult trade ever, honestly. This thing is just so strong. And then part of the reason why I decided to short Apple today, so I shorted this this wedge here on the 5-minute chart as it broke down. So part of the reason to be short Apple today was it was relatively weak for tech stocks. And we didn't really have clarity at this time of the day, I didn't think, that the Russell was necessarily going to be like dramatically more relatively weak than the NASDAQ. But we did pretty shortly after I had that short. We started seeing, so the TLT caught this big rally back up here to get back above 150. The NASDAQ, you can see on this pullback here. So to recap the intraday price action, right, let me just go back to the SPYs here, because it's important that I do this, because you can't really understand your trades if you don't understand the price action of the S&P. So, and the other major indices is one of the most important layers of probability in trading. So this initial bounce comes in the SPY. By the way, that's exactly what we're looking for based on our morning meeting game plan. We were looking for at least a short-term oversold bounce. And then we said opening low will be key. So we got it right off the bat. Wasn't sure if it was going to happen right off the bat, or if it was going to happen off like a 15-minute low. If some panic selling came in, it happened right off the bat. Bam, thing went. Perfect, beautiful. That's what we wanted. Continued up to the 80 MA. Perfect. Creates a little interesting doji here this first time with some higher volume. That could be a signal that they're trying to create a high here where we could pivot back down. I remember I was watching this candle after that intently, because if this candle was able to break above the high of that tail, they're probably going to give us more of like a 15-minute correction, and then I'd be more interested in putting shorts on into the gap fill area and into 440. 440 was the spot that I was talking about to potentially put your shorts on if that's what you wanted to do. Why 440? Because now you've gotten more than just a gap fill. You've also gotten a 15-minute chart correction. So here's my 15-minute chart to the 80 MA. And if you look at the daily chart of the SPYs, that's about where the 21 EMA is. So I had 3 different things that I was looking for into that gap fill 440 area where I thought that maybe we would get a pivot high and come back down. And that was exactly right. And then when we pulled back down here to 1045, I said, all right, if there's going to be a higher low that comes in the market, it should come in about now. That also worked out perfect. To give myself a pat on the back, because then I'm going to give myself the downside. I got to be fair to myself on both sides, right? To give myself the pat on the back, I feel like I called the SPYs like really, really well today. The opening bid, telling everybody not to do short selling off the open. The 440 resistance, kind of called that really well, and then the higher low in the SPYs. What I didn't do well was in choosing to put a short on, I guess, was going to the Q's weakest name, which is Apple. And again, my thought process was Apple is relatively weak amongst the major FANG names, below that 145.50, creating this wedge pattern, which is bearish. And if the market starts pivoting down, so here it is at 950, really 955 bar is where it starts to pivot down. And if the market starts to pivot down into this gap fill area here, that I could get a real breakdown in Apple and we could see further weakness. So for me, it's never enough just to short a pattern. The pattern is the execution, but it's the other factors that create the probability of success. So here's the pattern. Again, the pattern breeds the execution. So you have this wedge with this inside 5 at the end of it, with this 80 MA that caught up, that breaks down, That's the short. And then it's the other things I'm talking about. The SPY gap fill, the 440 area, everything else that is the reasons why I want to put the trade on more than anything else. The relative weakness also, right? So I put that trade on. Unfortunately, did not get my risk covered. To get my risk covered, I was bid just a little bit below this low. The low here is 146.05. I was bid just a little bit below 145. So I never got that fill, and then it popped up. I got stopped out, and then I relatively quickly, I guess it was right after this high came in at 1020, I relatively quickly reshorted, and I actually reshorted with about double the size of my initial trade. But it's not size that matters. I don't know. Josh is really mature, he's giggling. For markets, at least, it's not the size that matters, it's the dollar risk that matters. And we talked about this the other day when we talked about tier sizing. It's dollar risk, right? So you could take more tier size in certain cases and have less dollar risk because you're giving it less space risk, right? So my first trade here, I had a good bit more space risk, so I took lesser stock. On my second trade, I shorted above 146 versus highs. I think my price was like 146.10 or something on that second trade. So I only had like 19 cents worth of risk on that second trade. And that was taken mainly because of what I was talking about here with the market. I was like, all right, market broke up a little bit higher than I was looking for, but right into that 440, and instantly got that pivot hard. And this was it was like one of those, when you're looking at like capitulation in one direction or another, a lot of times it's like that very fast move. We talked about that other day when the Qs put in that pivot low right here. This on at about 10:30 a.m. on Monday. The low of the day in the Qs was like instant hit that low, immediately back up. And that's kind of what I saw the price action was in the SPYs here. Where it was like it instantly hit 440, bam, was coming back down. I was like, all right, that's definitely the signal. 440 is already a spot I'm paying attention to for all these reasons. And like the tape price action kind of just confirmed that. All right, let me reshort this Apple because it's already been a focus of mine. Luckily, on the second trade, I was able to basically get my risk covered at around 140, 145.60. I was even a little bit greedy on it. I took a bunch off. So when this thing eventually did stop me out, I didn't. It was a relatively small loser. Like of what I was initially risking in Apple, I probably lost a quarter of that. So I consider that to be a really good job, by the way, and not just to compliment myself, but to compliment anybody who's out there as a trader. The whole market of a successful trader, I think, is less about when your ideas work perfectly. For the most part, I know some people struggle a little bit with holding and reward maximization. But for the most part, you got an idea, you buy the stock goes up a bunch, you make a lot of money, you hold it, and you make even more money. Congratulations, it's not too hard. I think that the hallmark of a really successful trader is actually what they do when the trades that they take don't work out. Like that Alibaba, just to go back to the Alibaba trade that we spoke about, Alibaba this is a failed trade. But if you had good game planning, you didn't lose money in it. Good game planning and good execution, you didn't lose money on it. And even on this Apple, which was also a failed trade, Alibaba was a failed trade where I made money. Apple is a failed trade where I lost about a quarter of what I was initially risking. I'll take that all day on failed trades. And that was with the market just being incredibly strong and me kind of going to the wrong thing. Because what you can see, one of the things I was trying to describe, and this is what was frustrating me a little bit, was all right, the SPYs hit this high perfectly, and I guess I could have shorted the SPYs, but I shorted Apple almost based off the SPY action that I was looking for. But look at the pullback to the higher low in SPYs versus the pullback to the higher low in the Qs. This pullback is much lesser than the pullback is in the SPYs. And on Apple, it's even much less than that. So Apple, which had been, and I was commenting about it in real time, Apple, which had been relatively weak as far as the tech names go, and was seemingly heavy as this pattern was building out, all of a sudden was, even though it was still down more on a percentage basis, was showing strength here by not pulling back as much as the Qs, and definitely not pulling back as much as the SPYs. Otherwise, I would have gotten probably a further move down to like 145 quarter or so, which would have helped me book a little bit more on it, and then I probably would have been totally break even on the trade when it failed. But it is what it is, and that's just kind of where my error went in, if you want to call it that. And that's of course as there's plenty of other companies though that are just totally breaking down, and you probably would have been easier money to the short side. But with the way that the market closed today, it's just so hard to be short these big tech names. I mean, look at what the Qs did. Look at what Microsoft did. It's just absolutely incredible, and it's also incredible to me that this market can't go down for 2 days in a row. We'll see. We're not out of the woods yet. It's definitely a strong bounce back type of trading session, but we'll see if we get any further bounce. We'll see if we get a lower high in the market. So we're not out of the woods yet. There's still some things we want to pay attention to, but just once again, just showing the resilience of the market. But then you look at the IWM, you look at a lot of these other stocks, and these things are just beaten up. The Russell here is now 1, 2, 3, 4, 5, 6 down days in a row, 6 red daily candles in a row, when the SPYs and Qs can't go down for more than a day. And that's kind of where my frustration comes in, and that's where I've struggled in July and August, particularly August here. And I know that echoes the same thing from you guys as well, just because I chat with a lot of you, is that it's just like, man, I can't believe the S&P is at all-time highs, the Qs are at all-time highs, and I'm looking at these trades long, and they're just not giving me any follow-through, and they're weak, and they stop me out, and the breakouts aren't giving follow-through, and it's 100% true. You got to be, and we've spoken about this a lot, you got to be very selective in this market environment that we're in right now. So that's all I got. Happy to chat with you guys and any questions that you guys have here. So scrolling back up here, Robert, I'm struggling with the timing of my execution. I was looking at Alibaba at the open also, but I didn't know how to execute properly. Let's say the first candle open made a low of the day. Then which market order do you use and when? Market order versus low of the day. You're already making this question way more difficult than it needs to be. Market order versus the low of the day and get in the position ASAP, or if the price is going higher, we should not be chasing price with the market order, but place a limit order at lower prices and wait if the price comes back to our prices and trigger us and choose price, which makes sense for our risk versus the low of the day. All right, low of the day. I don't even fully understand everything that you're saying on the question, but we can just jump into it. There's a couple of ways to look at trades, right? And the way that you execute a trade is oftentimes based on the type of trade that you're taking. So a trade that I normally like a lot, especially for a name like Alibaba, is like the break through the level, come back up. We actually spoke about that. What day was that? 2 trading sessions ago? Yeah, 2 trading sessions ago. We spoke about that type of trade on the break of 175 buyback. So I spoke about I'd love to see an opening break of 175 where you can buy back through 175 versus lows. And this is another one that worked okay and then eventually rolled over and failed, obviously, as Alibaba has just been so tremendously weak. Today, pre-market, we spoke about stocks at 167 or 168, something like that, pre-market, when we were talking about Alibaba. And I was talking about, I'd love to be like long versus like 165. So this trade just a little bit different. 2 days ago, I was looking for the breakthrough comeback trade. This day, I'm basically just looking to, basically just looking to be long off of 165. And it was really more based on the degree of downside extension. Like I saw pretty quickly here that it held 165 and was coming back up off 165, and that there was liquidity at 165. I just went inside bid at, I think, 165.54, and I got and filled the entire stock right away on that inside bid, and then caught the bounce that I was looking for and got my one-to-one kick and all kind of the rest of that. So that's different than the breakthrough comeback up. So a good question maybe you're asking me now is, well, how did I know 2 days ago that I should be going for the breakthrough comeback up trade versus today I should just be going long versus the low? And that'd be a very good question. A couple of things. One of the bigger factors here is extension. As extended as BABA was 2 days ago, it's even more extended today. So that's why what I wanted to see in BABA 2 days ago was because of how big the gap was. I wanted to, and because it was gapping below 180, I wanted to see opening panic selling that triggered it through 175 and back up. And that's exactly what we saw. As opposed to today, I was more looking at it a little bit differently where, yeah, okay, we're having another big gap down, but I think I even said this out loud. I was like, what institutions are still selling? I feel like at this point, if you're an institution, you're either on the Alibaba train and you're riding this thing out or you're already out. That was my thought process. Clearly that thought process isn't right, or it wouldn't have broken down for another $5, but that's why we have stop losses in place. So, you know, my thought process again was, all right, huge gap down today when everyone's, and another thing that we always pay attention to is sentiment, right? Everyone hates Alibaba now. You know, it was back here more that a lot of people were still kind of maybe trying to defend it a little bit. Now it just seems like the Alibaba hate's becoming overwhelming. When that Alibaba hate becomes overwhelming, when any stock, any market starts to have almost ridiculous degrees of hate being thrown at it, that's usually, from a sentiment perspective, when we want to start taking the opposite side of those trades, right? So for me, my whole thought process was, oh my God, another huge gap down. Alibaba's massively extended. I was pre-market talking about like 165. It just held 165 to the penny. It's on its way back up. I'm going to take 50 cents risk here and see what kind of bounce I can get. So that's kind of the difference on the execution and the thought process, or the difference on the thought process that leads to the difference on execution between Alibaba 2 trading sessions ago versus Alibaba today. So I hope that helps, Robert. Follow up here from Robert already. On the other side, we often see opening candles like the SPY today, which never look back. Right. So that's so what the SPY did today is what I wanted Alibaba to do. Like Alibaba held that 165 so perfectly, it's on its way back up. I'm buying 165.50. I thought I was seeing 170 in Alibaba today. I really did. I felt really confident I was seeing 170 in Alibaba today. I was looking for BABA to do exactly what the SPYs did, and it didn't. You know, different stock, different dynamic, different country, whatever. It just didn't. And you know, one of the things that we were talking about in the morning meeting today was what type of low are we going to get? Are we going to get that type of low for the market? Because again, we wanted to be thinking about at least short-term longs. That was the big picture game plan from today's morning meeting. Think about short-term longs because of the degree of downside extension. Don't get too aggressive or too excited because it's only the first down morning after the first down day. That was the big picture game plan. What I didn't know was, is that open going to come right away because the dip buyers are going to come in and buy immediately because of the gap down, or do we see a little bit of panic selling because it's only our second down morning or whatever, that leads to more of like a 15-minute low where we can come in and be long versus that extension. And I said it pretty quickly. I said it within this first bar in the VTF radio, probably by the time we were going through 437. I was like, all right, that's probably it. That's probably already our opening low. I could tell really quickly before the candle had even closed. It's probably going to be our opening low in the SPYs and the Qs. So you can take that trade there. And same thing, you can just go inside bid and try to provide liquidity and risk not getting filled, or you could take, just take the offer and pay the spread and pay the exchange fees on kind of the actual execution itself. So yeah, I hope that helps. Sebastian, how do you overcome the fear of losing and stop missing opportunities? Sure, so it's a really good question there. How do you overcome the fear of losing? So I hate losing money, and I actually hate putting on risk. I love risking money that I've already made, and this is something that my team all should know because they talk about it all the time. Where I get really greedy and where I have a lot of risk is on money that I've already made. And that's pretty much how it is here for the most part with all my swing positions is, yeah, you know what? I've given back a lot of profit on my swing positions that I have here, like this month. But it's all that, it's profit. And I might not come in and risk $10,000 on a trade, but I got no problem risking $10,000 of open P&L that I've already made in order to potentially make more. That's where I get really greedy. What I struggle with is that initial risk. When you first press that button, when I first hit that short button in Apple today, when I first hit that buy button for Alibaba today, I might be buying an absolute top and it goes straight against me and I lose money. And I hate that. I hate that more than anything. I'll give back profits all day, but to actually lose my own money because I just bought the absolute top or whatever, I hate that. I really do. And it's something that can definitely be a little bit of a struggle. But with that said, you can never make money if you don't put risk on, right? So I'm a big believer that one of the main keys to successful trading is game planning. So one of the best ways that we can combat psychological things, emotions, fear of losing, whatever, is by having a game plan. Have that game plan actually written out, and now you're just following your game plan. You have to feel comfortable with losing money as well, even though we don't want to, and I hate it more than anything. But you have to feel comfortable that, you know, we work in a game of probability. So I don't care how good you are, you're gonna have trades where you lose money. So you gotta be comfortable with the amount that you're losing. If you ever look at your positions and you have an amount of risk on where if everything were to go wrong, you'd be very uncomfortable with the outcome, you gotta make a very fast change because you can't ever put yourself in that situation. And that's how we have to think, everybody. Seriously, everybody. I had a couple people email me. Won't say any names here, of course, but a couple of you guys reached out to me, you know, talking about some of you know, the stuff that, you know, you lost a little bit more money than you wanted to or whatever on some positions. You need to know exactly how much you're risking on any trade before you get into it. And if you don't know the answer to that, it's irresponsible trading, because you are eventually going to find yourself in a spot where you are stressed out and uncomfortable and you can't do it to yourself. One of the things that I always wish that I could do is I've always wished, and obviously this is unrealistic, but imagine if, instead of it just being all these numbers on my screen right here, imagine if I had to actually go into my wallet and I actually said, all right, I am risking this money on this trade, and I had to take it here and I gave it to Josh over there and I said, hey Josh, this money's gone because I'm buying this opportunity to make a trade. Think about how different we would be on our approach to risk if you had to give up the risk money before you actually press the button. Because that's inherently what you're doing. If you put a trade on and you risk $500 in that trade or $100 in that trade or $1,000, whatever your risk tolerance is, you should view that money as already gone. You should view it as you are paying money for an opportunity to make more money, and you may never see it again. And that's why it'd be so cool to just have to, you know, actually like take the cash out and do it. Because when you're just seeing the numbers on the screen, it sometimes almost just feels, I know it feels fake to me. And I try not to think about, like, on like a big down day, like, oh my God, I could have done a lot with this. Could have done a lot with this money, and said it's gone. You know, so those are some of the ways I think about it. You know, you really want to have that game plan written out. You want to know exactly how much you're risking on any trade you take before you enter it, and you need to be comfortable with the number. And if you're not, you need to make an adjustment to the approach, and view it as gone before you even do it. And then again, where we want to be greedy is on the win-win situations. Be greedy with the money that you've made. Like again, once that I got those Baba kicks, once I got my risk covered and I booked a little bit more to make sure I was going to make money in this trade no matter what, this is when my game plan got super greedy. My next spot I wanted to take a little bit of profit off of was in front of 170, and then from there, I don't know. Let's look at this daily chart. ADMA's at 180. Got to move to somewhere between 180 and 190 on this if it really works out right. It's exactly what we were looking for in inverse, unlike the AMD that got extremely extended, did exactly what it was supposed to do. Baba just wasn't ready yet. So I hope that helps, Sebastian. ET here from Macy's. You mentioned that Felipe was probably buying all the way up that second bar. What did you mean, and how would you have played that, irrespective of Felipe's execution? It confused me a little bit because I thought to use a buy stop through the high of the first bar to confirm the cancellation of that first bar. That's a sound strategy. It's a sound execution strategy, but would certainly be buying on the way up. And then Felipe is asking if I can read the question again. Felipe, just read. I don't know what question I read, but if you could, you're probably talking about Robert's question. So first of all, if Felipe is listening, it probably would be nice if he input some information into the VTF here for you on his own execution and what he saw. Because even though this was one of my ideas for the day today, I didn't actually trade it. I just saw Felipe calling out to the team, I'm buying Macy's, I'm buying Macy's, I'm adding Macy's, I'm heavy in Macy's, I'm really heavy in Macy's. I mean, you could scroll back up and see the timing on his executions because he was laying that out for us. So to answer your question, the way that you could buy in this bar is because you believe in Macy's, you saw that slow come in, you know the ADMA is coming up, and you see it's on the way up, and you're buying versus that low. You could definitely do that. I also agree with you, though, on waiting for the negation of the first candle. That's another sound execution strategy for this trade. If you're doing it early, you're going to have a better risk reward and lower probability of success. If you're doing it after it negates the first bar, you have confirmation now of that new high coming in. You're going to have a higher probability of success, but you're getting a worse price. You're going to have a lower risk reward. It's very often that we are exchanging better probability for worser risk reward, or worser probability for better risk reward. It's very often in trading that happens. It doesn't always have to be that way. Sometimes you can find that very high probability, very tight risk trade, but it's a much more rare situation. But yeah, ET, for sure. You know, one would just be, again, it's really about recognizing the chart with the ADMA in the low, then you're buying it on the way back up versus that low as the ADMA caught up. That's how you do that, kind of cheat, if you will. But the way that you're describing it is also very sound and very appropriate. No problem, Robert. Is that it? Are there no more questions? I don't know where Pat went, so I don't know if anybody posted anything else on the YouTube. If anybody's watching on the YouTube and wants to check, I'm always happy to help, but I can't actually see it right now. And usually Pat copy and paste it into the virtual trading floor, but he stepped off the desk. Where's the stop on the Macy's trade is then the low of the day. So once the question was, where's the stop on the Macy's trade? Once the ADMA caught the low, your stop is the low. And really, you probably shouldn't have been buying, even if you were buying it on the way up, you probably shouldn't really be buying it until this ADMA is just about caught up. So then your out can reasonably be the low, which would be, you know, 1878 in this thing. Cool. Anybody else? Anybody else have any other questions? Or otherwise we can call it. Again, I don't have a... Oh, thanks, Gabriel. Thanks, Sankit. What EMAs are you using? And what's your buy signal with them? Sure. So the main two moving averages I'm using are an 8 and 21 EMA. And they're not ever buy signals. They're tools. So moving averages are not support and resistance levels. They're never buy signals for me. They're never sell signals for me. They're tools. They're tools that I use specifically to measure equilibrium in the market. So this, again, the space between the 8 and 21 EMA for any chart that I'm looking at, 5-minute chart, daily chart, 15-minute chart, whatever, is the space that I consider to be the technical equilibrium for any stock or market that I'm looking at on any time frame. This is important to me in a number of ways. So for example, and it's going to be tough to get into too much detail on this, if you become part of the team, I've got like an hour-and-a-half class game planning, where I get into a lot more detail on how I utilize these moving averages. But I don't ever like using a stop loss if that stop loss is above the ADMA on the time frame in which I'm looking at. You have a much higher probability of getting shaken out of a trade that works if the upper band of equilibrium hasn't caught up to it. If I'm looking for a pivot low for trend continuation, I want to see where that pivot low is taking place versus equilibrium. If it's too high, honestly, like this one, I might not take that trade, or I might be a lot more cautious in taking that trade, or I might be a lot more patient in taking that trade. If this candle happened a little deeper in equilibrium than it did, then I might be a little bit more aggressive on taking that for, looking for a degree of upside continuation. So again, those moving averages are tools that help me understand extension. If I'm looking at Alibaba here on its daily chart, even though you could have shorted Alibaba through 165 with great success, and honestly, I think someone in the VTF here said, hey, what do you think about shorting Alibaba through 165? And I said I didn't like it. It would have worked great. I said I didn't like it for more than a scalp. I was like, I think it might be a good scalp, meaning all the stops are triggering, so you're going to get a fast flush lower. So you could have shorted 165 and then covered that entire position, and you would have made 70 cents in that almost immediately. That's what a scalp trade is. I don't do a ton of scalping anymore. I will kind of once in a while. I had a decent little Microsoft scalp in the close yesterday. But when I'm looking at a stock that is this extended on the daily chart, it generally means you're going to have a lower probability of success on shorting. And again, all that means is a lower probability of success. Doesn't mean guaranteed failure. As you can see here with the short through 165, that thing worked for $5+ on that trade. You could have shorted Alibaba today for 30 cents risk and caught $5+. I'm not taking that trade. I don't like that trade because of the degree of extension from the 8 and 21 EMA. The degree of extension doesn't mean that shorts can't work. It means that they have a lower probability of success. Also, a large degree of extension means that you can potentially start to look for counter trend trades. You got to be very cautious on your counter trend trades because counter trend trades always have inherently limited reward, as opposed to with trend trades can have a much more unlimited reward. So my favorite trades honestly, my favorite trades are trades where I'm looking at a trigger on a daily chart in a market that's not extended that I think could be the trigger that leads to momentum. An example of a trade that a lot of the team here was involved in, just kind of coming to my brain because I've been so focused on Apple recently, was buying 128 on this day. Look at this long consolidation that Apple was in for a couple of months here, with 128 as the clear resistance, and then it broke out on this day on higher volume. I want to be buying 128 because I think that the purchase of 128 could be the trigger that leads to a bigger time frame movement higher. That's my favorite type of trade. Your reward here in this is basically unlimited. So that's, to me, that's better than even like the AMD that I was able to short basically at the top here successfully for this pullback. I would prefer this Apple with trend trade, this break that's the catalyst for trend, this break that's the catalyst for momentum. I prefer this trade all day over being a hero and shorting the top in AMD or buying the bottom in Alibaba. But at this point, everything else held equal, given the degree of extension from that equilibrium area, I would rather be long Alibaba than short it. But again, we want to wait for a signal. We don't want to just be, you could have been blindly putting bids in at 165, 164, 163, 162, 160 hits. You're panicking, freaking out, you're smoked, right? Downside markets can always become more extended than downside. This is also why we don't want to just, buy stocks that are beaten up and blindly hope that they're going to bounce. It's a great way, especially if you're doing it on leverage. If you got no stop loss and no risk management in place, it's a great way to blow up your account. So that is the answer to the question on the moving averages. At least it's the short answer. Next from Sharir, what do you do when you have a smaller position but regret, I guess, not sizing bigger? What do you do when you have a smaller? Nothing. Move on and do better next time. That's all you can do there. You know, I don't. If you add incorrectly because you have a regret, it's a great way to turn a winning trade into a losing trade. You never want to do that. So you had your game plan. Your game plan had you take that amount of size. Maybe it should have been more size. So do a better job next time. Inside bid and inside offer for a quick lesson. So that just basically means what the highest bid is and lowest offer. So the inside bid for the SPYs right now is $439.98. The inside offer is $440. The spread is 2 cents. You could say the stock is trading $439.93 now by $439.95, 98. It's obviously moving because it's the SPYs. So when I'm bidding inside bid, basically it just means that, like, you know, if I wanted to buy 100 shares of SPYs, I just bring my I just bring my SPY box up, and right now the inside bid's 95. I press enter and I join the inside bid. That's what I did with Alibaba. I just joined the inside bid, as opposed to, so that means that maybe I don't get filled, right? Like I might actually not get filled on my order, and the trade could work without me because I need someone to actually hit my bid. So if you want the guaranteed fill, you got to take the offer. So if I pressed enter now, I would immediately be in the position. I would just take the offer at the inside offer because my offer, my bid is set to come in above the inside offer, so it's going to fill me immediately. But it's more expensive to do that. It's more expensive to get immediate fills. You got to pay the ECN cost and you pay the spread. So when I feel comfortable that I can get the stock, I like to bid in, even if sometimes that means just going inside bid. And every once in a while, I'll miss the stock entirely, which is what it is. From Matt Fisher, also, I assume you're using hotkeys. How do you set your stop losses so quick? How do you set your stop losses quickly? Yeah, hotkeys. I can put in orders into the market faster than an order per second. Bids and offers and stops. I once was too fast for the system. I put so many orders in so fast, something that was moving very rapidly and very quickly, that like I triggered some response from the system, and it was like, you can't place orders because you put in too many in too short of a period of time. I use that. That's like really impressive if you can do that. It's like really hard to do, but it happened to me one time ever. I can use my stop key, my hotkeys, and I know them so well that I can put in, you know, if I needed to put in 20 orders, I could do it in 20 seconds. No problem, Andy. See ya. From Amit, I'm holding Amazon for September 2021. Oh, calls. Should I sell for a loss? I got out of Amazon today. I got out of my Amazon position today. So what I would say to you is you should follow your game plan that you established for yourself on the trade before you entered it, which should assume some sort of risk management to it. And I would just put, that's the number one thing you should always be doing, is going back to what I was saying earlier. You know, follow the game plan that you placed for your trade before you got into it. You should always know exactly how much your game plan calls for risking before you enter the trade. If you don't have a game plan and you're just in it right now and you're trying to figure out what to do, that's a mistake, but we can learn from that mistake, but we still got to come up with a game plan more immediately. It depends a little bit on your risk tolerance. At this point, if you're not already out, you might want to consider giving into this pivot low of 31.72. It is now a little bit extended to the downside. I don't like the relative weakness in Amazon compared to the NASDAQ today. NASDAQ closed decently positive and Amazon was weak. It's 3 down days in a row. So it's kind of hard to hit out here. So hopefully you originally have a game plan where you know what your risk is, and I would say just follow it. And if you don't, create one here and now that you're comfortable with. And if you can afford the risk, possibly consider using the June 7th low. How many trades do you usually make in a day, and in what time frame do you trade intraday? So I do some pure day trading. A lot of what I do is day trading around a longer time frame core swing position for cash flow. So like you'll see in my execution sometimes that I got the like I might have some of these stocks that I'm in, but I'm doing a lot of kind of rapid trading, a little bit kind of back and forth in them for that cash flow. So I do a lot of that. So it makes it a little bit difficult to define what constitutes as a trade, because if I sold a little bit of a stock that I'm swinging and rebought at a lower price, like I do that a lot, does that count as a new trade, or is it still part of that other bigger picture trade? So I really prefer to think about it more in terms of volume. It's not unusual for me to do in excess of 1 million shares of volume a month. My volume's probably been a little bit lighter here in August. I only did about 20,000 shares or so today. So that's a little light, but so that's kind of the answer to that question. But it matters more for you. You guys got to think about what your numbers are and what are appropriate for you. Don't remember from the liquidity class on inside bids. Are your bids? Yes, they are. They are adding liquidity. You get the rebate if you go inside bid, provided that you were truly going inside bid. Sometimes the market moves so rapidly. Like if you go back to the SPYs, now it's after hours here. Sometimes the SPY moves so rapidly that by the time I bring my bid box up and hit enter here, it might already actually be, the offer could be at 98 cents and I could be actually taking liquidity. So you just got to be a little bit careful on that. My routing class should be on the training program very soon. My understanding is that it is approved by the compliance department. I'm just waiting for our tech people here to actually load it into the portal so you guys can have access to it. Since I'm making announcements on that, another announcement I should make is if you are a professional prop trader here at T3 and you reference over someone to the team here who is interested in becoming a professional prop trader at T3, you are going to get $500 loaded into your account once your reference joins the company. We're looking for talent right now, so we're doing this referral program. Once that account gets funded, you'll get $500 in your account. So if you want $500, reach out to your friends who are into trading and let them know about how sick our group is and how awesome the information is here that we're providing. I feel like I had one other announcement that I needed to make, but I don't remember what it was. So I guess with that said, I will call today's meeting. For some of you guys who are asking a lot of questions here through YouTube, reach out to T3 Live and inquire about how you can get involved in the ProDesk virtual trading floor, so you can actually get this information more in real time when we're getting our ideas out there. We've got a really strong team in here, and we're looking to grow that team with people who are interested in approaching markets in a professional manner. Doesn't necessarily mean that you have to be a professional trader. I don't want random jabronis. Is jabroni a curse word? I don't think jabroni is a curse word. I don't even really know what jabroni means. I don't want just random jabronis in here. I want people who are interested in approaching the markets in a professional manner and are here to learn or here to provide good information. So if you're out there on YouTube, reach out and become part of the team. And if any of you guys, if any of you guys are knowing anyone who's interested and you're part of the prop program here at T3, you can get some money in your account. So figure that out too. Have a great night, everybody. I'll see you all tomorrow.